cool. So I'm just gonna do a brief summary on IAS 28 and what it entails, and just like, yeah, talk about that. Okay, cool. So IAS 28 is let me get my pen. Cool. I'm happy with this one. Okay, cool. IAS 28. Please forgive my very terrible handwriting. So IAS 28 is basically another degree of influence. So we have control, which is governed by IFRS 10, and then we have investments, which is IFRS 9, and then we also have joint ventures as well, which forms part of this standard. So the degree of influence obviously influences how we're going to account for it in our financial statements. So with IAS 28, we obviously are not at a 50% shareholding, which will then put us at which is less, right? So anything over 20%, then I need to start considering whether, sorry, the other way, anything over 20% will then either be in this standard or it'll be in another standard, right? So we have to think about, guys, sorry, these admissions. Yeah, so we have to consider those two things, right? Then we have to think about the significant influence when we're talking about IAS 28. You have to consider different things. You have to think about the power, right? So I know you guys are doing consoles now, so you should be familiar with the definition of power, right? Anyone?
Yes, that's correct.
Anybody? Okay, do you want to just bounce off me what you think power is? There's no wrong answer, please. I just need you to interact. Anybody?
I can try.
Please.
So are we talking about power in the investee?
Yes.
Okay. So
what would power mean?
Power means that the investee has existing rights that give it the ability to direct relevant activities in the investee. So they also have power.
Perfect.
Yeah.
Yes. Yes. So you're right. So when we are looking at IAS 28, we need to think about, okay, so if I have like more than 20%, I'm obviously not, and it's less than 50%, we obviously can't control what happens, but we can influence what happens to that specific investee, right? So we have the power to participate here. Which is the keyword that you, I think, can take today, is that I participate in what happens in the relevant activities of that specific investee, right? I can participate in their financial or the operating policies, that type of stuff. So that those are the things I need to consider to see which standard I'm in, right? So when we are in IAS 28, we also have to consider equity accounting. Right, does anybody have an idea what equity accounting is or the equity method is? Again, no wrong answers, please, somebody shout. Guys, I can stay in silence, I don't mind. Anybody?
Could you please repeat the question?
what do you like? What do you know about equity accounting?
Mm. I think I know what equity consists of, but I'm not sure if that's what you're asking.
Okay, cool. So when we do consolidations, right? We are obviously taking 100% of my subsidiary, and then I'm taking 100% of my parent, and I'm forming the group, correct? So when we equity account, it's not, I can't take 100% of my investee because I don't own 100% of it. So I must equity account it according to IAS 28. So with that, what we do is that we recognize our investment at cost, right? That's our first step, is that we must recognize our investment at cost. The second thing that we have to do is that after I've recognized my investment at cost, I need to account for the share that I have in that specific investee. So adjust, second step, adjust for the profits, my share in the profits, right? And any, what's that thing? OCI. Yeah. So do you guys agree with me that if I am going to adjust for the profit, which is obviously through the statement of profit or loss or the OCI, it's going to be recognized in that specific journal in my books as the investor. Are you guys comfortable with that? Please, if you're not comfortable with talking, also use the chat box as well. That helps me. Okay, cool. And then the next thing that we need to consider is any distributions that we have. So that's your dividends. You have to take that into account as well. And that reduces my carrying amount. So reduce. Of investment. Okay, cool. And then afterwards, we need to make an adjustment in our, like I said, in the profit or loss and in our other comprehensive income. When we are, like anything that happens in my investee, I need to make sure that it mirrors that in the actual, as the investor in my books as well, right? Are you guys comfortable with that?
Yes.
Okay, cool. Yeah, so there's not really like much theory to like go over. I'm more focused on trying to get you guys to do the practical application of the actual standard. So we will do, so I have a question. So I don't have your guys' chart. So we're gonna do my own question. Very cool. Please just confirm that you can see, because I can't see you guys anymore. Yes, no. Can you guys see the screen?
Yes.
All right, cool. Perfect. Cool. So it's a quick 15 marker, but then we'll just go through each and every point just to understand the principles of IAS 28. So Keen Limited owns 30% of Red Limited, right? So we see that it's not 50%, it's not above the 50% threshold, and it is not less than 20%. So it is not a subsidiary in my books, and it can't be an investment under IFRS 9. So I must now consider whether or not it's an associate or if it's a joint venture, right? The relevant activities of Red Limited are directed through a majority vote of the ordinary shares, and the voting rights are allocated to each ordinary shareholder in proportion to the number of shares held. So the reason why I asked you what power was, because now I want you to see, like in the specific question, they are guiding you to show you that the amount of the percentage in the shareholding that they have is their participation in the actual activities of that company. So then now I'm like, okay, cool. I see so far there's not another party that's mentioned. So it can't be a joint venture. It can't be a joint arrangement. It has to be an associate. But we'll just keep reading to confirm, right? On the 1st of January 2016, Keen Limited sold a delivery vehicle to Red Limited at a profit of 50,000 Rand. The delivery vehicle had a remaining useful life of 4 years on the 1st of January 2016. So this specific transaction, we can see that it is a downstream transaction because it is Keen Limited selling the vehicle to Red Limited. It would be an upward stream if it was Red who was selling to Keen, right? And we all know that in consolidations that we have to also consider the fact that the unrealized profits must be eliminated. Otherwise, it's not allowed in the consolidation process. It's seen as if this didn't happen. So I have to eliminate it from my books, right? So Red Limited earns profits during the 2016 financial year of 300,000 and declared a dividend of 60,000 Rand on the 31st of December 2016. In addition, Red Limited revalued a plot of owner-occupied land by 20,000 Rand on the 31st of December 2016. The Keen Group policy is to account the owner-occupied land using the revaluation model, right? Based on the information provided, prepare all the pro forma journal entries to equity account Red Limited in the group annual financial statements of Keen Limited in the financial year ended 31 December 2016. Okay, cool. You guys are comfortable with this question, right? Very cool. Let's work on the answer together. Okay, cool. So we're doing the pro forma journal entries. So you guys are comfortable with pro forma journal entries and the process of consolidation? Yes or no? I'm going to take that as a yes. So yes.
I was gonna say I'm comfortable with the subsidiaries, but I've never actually done the associates. So this is going to be my first time. But yes, I think
Okay.
I'll follow just fine.
Okay. So I'm assuming that everyone is semi-comfortable with doing the analysis of owner's equity, right?
Yes, yes.
Okay, cool. Perfect. Thanks, Ati. Cool. So I have to 100%. And from the question, we have 30% shareholding, right? In this Red Limited. Is everyone comfortable with that? We all read it? Cool. So in the current year, my question tells me that there was a profit of 300,000 Rand, right? Right. And then, sorry, now you need to help me because I don't have a calculator. Can somebody please calculate for me? Anyone? please calculate 30% of 300,000, please.
It's 90,000.
Okay. All right. So I have 90K on my side. And the dividend that we had was 60, right? All right. Oh, that's an extra. Okay, it's not an extra 0. Can someone please calculate 30% of that for me, please?
18,000.
Okay, thank you. So my share is 18,000, right? Okay, so sorry, this extra column here is just to show like my actual investment, right? I'm trying to see how much is my investment at the end of this. So already from this journal, my quick exam tip is if you are doing the analysis of equity, you take for like time purposes, right? You know, like this stuff takes time and sometimes you run out of time and then you haven't actually answered the question. Most varsities will not mark this because this is not the answer. They asked you to prepare the pro forma journal entries. So if you have now, let's say the other question took you so long that you've now done this, you technically have the answers, but you've not answered the question. So my tip is take what you have answered and start putting it in, like as you do it, into the pro forma journal entries. So you agree that I've already calculated the profit, my share of the profit. I can then now start putting this 90,000 as a journal, right? And then I can also put in my share of the dividend, which is this 18,000 and a journal, but I'll show you how it's done. Okay, cool. So we also had revaluation throughout the year, right? And the revaluation was at 20,000 Rand. We agree that this is going to be recognized through OCI, right? Can someone calculate?
It's 6,000.
Thank you. That's 6,000. I have a 6,000 share in that. Can you calculate the deferred tax implication for me, please? Which will be at 28% of that 20,000. Please.
It's 5.6.
5.6. And then can you calculate the 30% portion of that for me, please?
Okay, so I was calculating the 28% on the revaluation, right?
On this 20,000, yes.
Yes, okay. Yes, it is 5.6.
Okay, and then can you calculate the 30% portion of that? Because I have to take out the share.
I got 1,680.
1,000?
1,680.
680. Okay, cool. 680. This is going to affect that, right? Okay, let me make this smaller so you guys can see. And then remember, we had a downstream sale, right? We sold a vehicle to Red Limited and the profit that we made on that sale was 50,000 Rand, right? You remember the sale on the vehicle. And remember I said that the unrealized profit must be eliminated in my group financial statements. Are you guys happy with that?
Yes.
Yes.
Okay, cool. So that 50,000 I must eliminate again, like I said, but I must eliminate obviously my share of it, right? But it's not going to be in the books of Red, right? They have the asset, Red has the asset, but I need to I need to take it out of my books as Keen Limited, as the parent, because I'm the one that sold it and the profit lies in my books, in my separate financial statements. Do you understand? Please, I can go over that point again.
Yes.
Hey, can you please just go over it again?
Okay, cool. So we need to reverse the profit in Keen's books, right? As it was originally recorded in Keen's books, right? Because now it's a downward stream sale. There's no adjustment in Red Limited's books because Red Limited has the asset. They bought the asset, yes, but I can't do an adjustment for that in terms of in their actual books, but I must adjust in my books. But it's overall in the group, it has an effect. Do you understand?
Yes, I
Yes.
understand. Thank
Yeah.
you.
Okay, cool. So I need to make an adjustment, obviously at 30%, but it's going to affect the investment portion. Can you please calculate 30% of the 50,000?
15,000.
Okay, thank you. Right. And then we'll have an adjustment there. And we all agree that we have to take into account the deferred tax, obviously, right? Can you please calculate the 28% of this for me, please?
We must calculate the 28% of 15,000.
Yeah.
All right. It's 4.2.
Thank you very much. Okay, cool. So now I must also now take out another portion of it from my books as well, right? I'm going to take out from that 50,000, there was the depreciation aspect of it. Remember they said that the asset was depreciated over 4 years, right? Are we okay? Not okay? No? Okay, I'm gonna assume you're okay if you don't say anything. Can you please calculate the depreciation aspect of, so it's 50,000 over 4 years times the 30%?
It's 3,750. 3,750.
Okay, cool. And can you calculate the deferred tax on that, please, at 28%?
It's 1,050.
1,050. Cool. Are you guys happy with that? If you have time, you can actually do.
I don't know if it's just me, but I can't see the last part of your calculation.
Okay, cool. Let me try and drag it. Can you see it now? Because I've zoomed out.
No. No.
Maybe please make your
It's
smaller.
yeah,
Sorry?
because it's been hidden by these contents like at the bottom, like your participants, the chat box. Yeah, it's been hidden by that.
Oh, okay. Okay, wait. Give me a second. Let me see if I can move this from my taskbar.
Guys, I think we can control the screen. Because
Can you really?
Is it okay now?
Can you take it up a bit?
I can't.
Yeah, that's what.
Maybe make it smaller then.
I did.
Hmm.
Let me see if there are more tools to help me. Okay, cool. I'll just share this PDF with you guys. Is that fine?
Okay, cool, no problem.
Yeah. Okay, cool. But I am going to erase this now because I need to actually answer the question.
Mm,
Awesome. Wait, is it better now? Can you guys see?
yeah, but it's small.
Hello?
Not really, but it's fine.
Are you erasing everything?
You're erasing some.
Yes.
Yeah.
Okay.
Okay. Yes, I'm erasing everything. I will share this with you. I'll also try and share the solution.
Okay.
Right.
Okay, cool. Okay, this is taking a lot longer than I want. Okay, cool. All right, cool. So let's actually answer the question. So with the pro forma journals, where do you think we should start? Guys, anyone? We have the answer. We have everything. I just need to know, like, where do you guys think we should start? Which one should we answer first?
Amy.
Okay. So that's also that's also a smart answer as well. Okay, cool. You guys can still see, right? The whiteboard.
Yes.
Yes.
Okay. Cool. Sorry, it's weird on my side. Okay, cool. All right, cool. So my first journal entry is going to be investment in associate. And that's going to go in my statement of financial position, right? And I'm going to credit my share in profit.
Are you writing the journals?
You cannot see the journals.
No.
Oh.
No, yes.
No, I can't
No.
see it.
There's still a couple of numbers left on my screen now.
Oh, I think I know what's happening. Oh, I'm so sorry. All right. Can you see the new screen that I'm writing?
No.
Not yet.
Okay, wait, give me a second.
It's clear now.
Okay, so it's clear.
Yes.
Yeah.
All right, cool. So the first journal is going to be invest. Oh, guys, my handwriting. Thank God it's not a competition. And associate, right? And then this is, like I said, it's going to go into my statement of financial position, right? Are you comfortable? Then my credit entry is going to be my share in profit. Those are two different words. please. Let's not judge me. And that is going to go in P&L. So remember I said, wherever it is in my investee, it must also then be in my books as well, right? Or in the group's books. Comfortable. Sorry, can you guys tell me the figures again? Konja, how much did we calculate the profit, the share in profit?
It was 90,000.
Okay. 90 and then 90. So you guys agree, Ruti, that like if we had done the analysis and then we quickly did this journal, that you've already got 1 mark, right?
Yeah.
So that's what I meant, that like if you do one thing on your analysis, quickly put that journal in if it's a journal that they're asking for.
Yes.
Okay, cool. Next one, we had a dividend, right? We need to eliminate that. Correct?
Yes.
Yes.
Okay, cool. So that is the dividend was how much again?
18,000.
18,000.
Oh, guys. All right, cool. And then we have right. This is going in my FP. This is going in my P and R as well. You said 18, eh?
Yes.
Okay. Right. All right. And then the next thing was the revaluation, right?
Yeah.
The revaluation was how much again?
6,000.
1,000.
P. And then we're going to credit my share in OCI, which is going into OCI in my books. And we said that was 6,000, right? And then what was the tax effect?
It was 1,650.
So you guys agree with you, we can actually just make one consolidated journal instead of doing a separate journal for the 6,000 and then for that 1,000 as well.
Yes.
So you are comfortable with that?
Because it's my first time, I think it's, this way is fine to give me an idea.
The
So
longer way.
Yes, the longer way.
Okay, cool. Sorry, I'm running out of space and I'm afraid that you guys won't see anymore. So I'm just gonna erase while I do these journals. Okay, pen. Okay, cool. Next journal. Okay, so it's the tax effect, right? We're going to recognize the investment in associate. Can you still see it here?
At the top, yes.
So you
Yes.
can see. Okay, cool.
Yeah.
And then I'm going to credit deferred tax, which is going to be in my profit and loss. This is going to FP. And then, oh guys, sorry, I'm not using a mouse as well, which is so hard. Okay, sorry, give me the amount again for the deferred tax portion.
1680.
1680. 1680. Right, perfect. And then the next one was the profit element of it, right? The profit on the sale. Right? Nope, comfortable? Nope. Okay, cool. On sale, right? Just going to my PL. And then I'm going to have, wait, how much was it? The 30% or 50%?
15,000.
Okay, and again, we agree, Uguti, that 15,000, I could have also done it with the tax element of it. I could have done one big journal. Okay, just in my statement of financial position. Right, cool. Does anybody have any questions so far?
I was just gonna say, I don't know if it's just for me, but I think the associates are in the next learning unit because they said the test is gonna cover learning unit 1 until 9. But in tutorial letter 104, it's until learning unit 8. But if you check there where there's someone on the stairs, it says associates. I think this is the next unit. But yeah, so far so good.
Yeah, the reason why I covered it as well is that I like if it says 1 to 9, then I assume 4 is in that group, right?
Yes, but also thank you for the head start.
Yeah, because I just figured it's in there and you still have to learn this content. So that's how it's just like I could have done consoles as well, but this is also a part of the console process as well.
Okay.
Like you can't not know associates. Okay, we're not done. We still have, I think, 2 more journals, the tax ones. Okay, which was my associate, which is going through the statement of financial position. And we are deferred tax, which is going through my profit and loss. And then how much was it again for the profit on sale tax portion?
It was 4.2.
Okay, 4,200, 1,200. Okay, cool. Oh, guys, please, if the question asks for journal narrations, please add journal narrations because I'm not doing that right now. And then we have to take out the depreciation portion of the profit. How much was that again?
3,750.
3,750. Yo, guys, I forgot to admit people. Oh my word. I'm so sorry. Yo, I'm so sorry. I genuinely forgot. Okay. Cool. This is investment in associates, right? And then this is, I think it's my unrealized, What's going in my profits loss? Okay, can you still see?
Yes.
Okay, cool. All right. Okay, cool. Last one is the tax element of this journal, which is, how much was it? Wrong sign.
1050.
10.15, eh?
Yes.
Which is 10.50, 10.50. Associate. And then this is my deferred tax, which is going through P&L. Cool. So we've answered the question, which was the pro forma journal entries that we account for when we have an investment in associate. So this is pretty much equity accounting, the equity method, when they speak about that. So the similarities to IFRS 10 is that we're still obviously going to need the analysis of owner's equity, right? We still have to take into account the deferred tax movements that happen. We're still eliminating any intergroup transactions that are happening in my transactions. But then where it differs is that I no longer have a share, so I'm not going to eliminate all of the net assets, all of the profit, all of the, or reduce all of the dividend, because I only have a share of that specific investee, right? And this is like a thing that someone taught me as a way to remember the difference between the two. When I'm in IFRS 10, which is the group statements, I am obviously doing 100% and my percentage, and then I have the NCI column, right? In this specific one, in the equity accounting, think of it as you doing the NCI log. Now you no longer have to do 3 columns where it's 100%, for example, 60%, and then 40%. Now you're just doing the 40% because you don't care about the other portion. You're just focusing on what belongs to me and my share in that specific investee. Are you guys comfortable with that?
Yes.
Okay, cool. Do you have any questions with equity accounting or group? Any questions? Or die, forever hold your peace.
Did you say we could ask about the group?
Sure, if you what?
Okay, so there was an activity I was doing earlier. I was actually watching a video. So when we calculate NCI, there's 2 methods, right? So now I was quite confused. So when we use the proportionate share, you calculate using the net assets, right?
Yes.
And then when you calculate using the fair value, you take the number of shares and multiply by the fair value.
Yes.
The amount of fair value. But now, when I was watching that video, they took the number of shares and then multiplied it by the percentage. When in the question they said proportionate, the fair value method. So could that have been like just an error, or maybe I missed something?
Okay, wait, just run through your question. Instead of taking you said the question said that they must account for NCI at the fair value.
Yeah, in the question.
Right? Yes. So you're saying in that question, instead of taking the fair value of that specific NCI, they use the proportionate share. Yeah, then it should, if they say fair value, then you look in the question to see how much is my NCI actually worth, and that's what you use for your NCI. Like, yeah, I think it might just be an error.
Okay.
Yeah, because there's only two methods. There's no other trick question. It's either fair value or a proportionate share.
Okay, there was another question. You know, when they bring in like a valuator to value some assets, and then they make journals on acquisition, and then they wait until the valuer comes back to say maybe like an asset is worth this much, and then they redo the journal. Okay, I think it's page.
Oh, I don't have the chart open.
Okay.
Okay, but yeah, just ask the question.
Okay, I'm just going there now. Sorry. All right. So it's measurement period. Yeah, so my question relates to the measurement period. So on the date of acquisition, they recorded the plant, the revaluation, and the equity, yeah, the non-controlling asset, the goodwill, and everything. Yeah? And then now you have to calculate the depreciation on the revaluation surplus. So they calculated accumulated depreciation on the revaluation surplus of the land, and that was done. Now it's the 30th of June, which is year end. Now we have the amount from the valuator. So now they have retained earnings and accumulated depreciation on the new revaluation surplus calculated. So I was quite confused as how we account for the revaluation surplus on the date of acquisition, and after we have now the amount from the independent valuation.
So remember business combinations, just IFRS 3, it says that I must, okay, sorry, I think of it as a pot, right? This is my pot. When I buy something, my NAV, right?
Yes, yes.
My NAV must be at fair value, right? Except for those exceptions that they give us, right?
Yes.
So now, if on that date of acquisition, that specific asset was not at fair value, we agree with you. I'm not getting my, like, it's not correct accounting to the users because it's not actually worth it at that date. I was entitled to either more or less, and I must put it at how much I was actually entitled to at that date.
Yes.
Yeah. Right? So at acquisition, I'm going to, if I have everything, it's going to be at acquisition. But then subsequently, I must then now adjust to get to the specific valuation. Right. So in your specific question, are you asking about why we went to retained earnings?
Yes.
Okay. Was the retained earnings for the new fair value or the previous ones?
Okay, it was for the new fair value.
Okay, cool. So you agree, Uti, it's going to affect my previous profits?
Okay, I'm not sure. The revaluation surplus.
Yeah, if it's going through OCI, right? It's going through other comprehensive income. That affects my profit, right? And that's what retained earnings is made out of.
Yes.
So I have to adjust for that. That's what I'm adjusting. Remember, on this date, I'm supposed to have 100 Rand of my asset. Now I thought, oh, okay, on this date it was 30. Then the valuator comes and says to me, oh, actually, no, Sanda, sorry. It's actually a little bit more than what we said. My profit previously was obviously not what it really was supposed to be. I'm supposed to go and fix that.
Oh, okay.
I'm
now I get it.
fixing it.
Oh,
It's
now
like
I get
that's, yeah, I'm saying it like in the most simple English, that I have to fix it to reflect what it's actually supposed to be.
Okay. All right. Thank you.
Anybody else with a question before my battery dies and the lesson ends?
In the test or exam, can you expect a discussion question?
Oh, that's my favorite. Love discussion questions. Oh, okay, cool. So when we're doing a discussion question, right? I think, well, my biggest mistake was I would theory dump.
Okay.
Right, not good, but also not bad, because then when I was like, oh yeah, you're not supposed to theory dump, then I stopped putting theory down at like, and then it was bad at like, you have to have a balance between theory and application, right? So the marker wants to see that you know the issue, right? First thing, step one, you have to identify the issue, right? Usually you tell the issue that here, for example, the conceptual framework, the issue here is whether or not we are looking at the debit portion of it. Is it an asset or is it an expense? That type of stuff, right? So you need to identify the issue. Actually write down what you think the issue is. It's usually clear,
Okay.
right? And then step two, mini theory. That word mini is silent. Put in the definitions. Oh, guys, my chirungo right now. Put in like the little bit of theory that you have. So for example, you'll say like, say it's a revenue question, you'll say that there's a 5-step process in revenue, right? Like you've identified that we are identifying the performance obligation.
Okay.
Then you say this is what a performance obligation is. You've now stated the actual theory of it, right?
Okay.
Mini, like I said, mini theory,
Okay.
right? Then what you're gonna do next is, where am I? Okay, cool. Step 3, you're actually going to apply the theory, right? So now
Okay.
you've identified that we are looking at the performance obligation, for example. Now you're going to say, in this specific scenario, these are the factors that I have to consider, for example. You're considering X, you're considering this, and then now you're applying it to that specific scenario. They just want to see if you know what this is, how does it relate to the specific question? So like in our question, the question that we did, okay, cool. Sorry, give me a second while I find this. Okay, cool. Cool, you can see my screen there.
Yes. Yes.
So if, for example, they asked us in this specific question and they're like, okay, explain the control of keen and to red, like what is the influence there? So the things that you're going to answer is say, okay, so the issue is whether or not Keen Limited owns controls
Right.
Red Limited, right? Then you're going to go and say, okay, what's the definition of control? You state what the definition of control is, right? Then now you're applying to see, does this specific scenario meet those definitions? You say,
Okay.
okay, no, they don't necessarily actually control them because they have the power to participate through their voting rights, but they cannot actually direct the relevant activities, right? They can't actually say what happens to the finances, what happens to this, and like the everyday activities of this company. So now you've applied, you've disproved that it is control. Then now you
Yeah.
move on. Okay, so now I must, because it is now control, the definition of control is not met. I must consider whether or not it is an associate or an investment. Investment is the last one because it's 30%, you already know it's an associate. So you'll say, okay, the definition of significant influence is X, Y, and Z. Then you'll say, okay, it meets it because King Limited actually participates in the relevant activities. The definition of power is met. Then you say, okay, this is an associate and they will record it or they'll account for it under the equity method. That's how you answer a theory question.
Okay. Thank you so much.
All right. Thanks, guys.
Thank you.
I think I have to end here.
Yeah.
Before my
Thank
laptop
you.
dies.
Please send the question and the memo. The one we
Yeah.
did. Yeah.
All right. Thanks, guys.
Thank
Okay,
you.
bye. Bye.
Bye.